Palantir's earnings are coming up very soon, but they still aren't slowing down being in the media, with a couple items I actually didn't cover yet in the daily videos. So looking at the stock first, Palantir closed up in the $23 range, being modestly up for the week a couple percentage points. This is right before earnings, but we still have one trading day before earnings since that will be released after hours on Monday. So starting off the week, Palantir released their SEC filings for the proxy documents, and that's to help shareholders make their voting decisions at the annual shareholder meeting. It's taking place on June 5, where the two items to vote on will be for the directors as well as the audit firm for Palantir's financial results. So if you have shares, I'd at least encourage looking out for these meetings, especially when more significant voting events are up. Now, on the daily video, I did go over the interesting part of the compensation here that's disclosed, but there is a ton of other information on the business itself, like risks, the landscape they're competing in, and many more. So take some time to review it when you have a chance. Then we got the Hill and Valley Forum on AI security. Alex Karp actually had two interviews, as well as Joe Lonsdale doing one right after one of Karp's. Essentially, it was a very government-geared conversation and more about big picture of AI, technology in the defense space, but also sprinkled in with Karp's thoughts on current events and political happenings around the country. So he did tout a couple times the 70% U.S. commercial growth numbers in the interviews, but did make sure to stay away from anything specific considering earnings is in a couple days. And probably the most over-read into statement was his vision for where Palantir will be in 20 years, and he said he thinks they can be 10 to 20 times bigger in 10 years. And I know everyone first thinks of market cap and such, but the size of the company, but I'm really just thinking it's just so open-ended. He could really just be referring to anything. So I'll leave it up to you to interpret his statements. Then, for some stuff that I didn't cover, Shyam released a commentary piece on War on the Rocks called Why Increasing the Value of Defense Primes is Good for the Country. It's quite a read, but a brief summary is that Shyam discusses the financial health of the defense industry, and then highlighting that despite its stability, there's a lack of innovation reaching service members. So he debunks the common notion of blaming defense contractors for prioritizing profit over innovation and greed, pointing out that the root cause actually lies in the Defense Department's acquisition preferences and regulations. So he's blaming the process essentially. Shyam basically suggests that the government policies inadvertently hinder innovation by favoring cost-plus pricing, reimbursing research costs, and capping profit margins, where in the end, these practices actually discourage private investment in research and development, leading to higher costs for the Pentagon and less innovative capabilities for service members. So to fix this, he proposes shifting towards a commercial model where primes invest in privately funded research and development, and that's to create innovative products. Then, by removing barriers such as cap profits and government ownership of intellectual property, primes can therefore increase their value and attract private capital for research and development. So he makes sure to circle back to the importance of collaboration between government and industry just to foster innovation and efficiency in the defense sector, and argues that improving the financial health of primes is then going to benefit the investors, of course, and then the DoD, and then any new entrants in the defense technology ecosystem, ultimately enhancing national security capabilities. And this makes sense from Palantir's perspective. It would actually help them if the DoD were to update their processes. Essentially, for products that are actually performing, they'll be the winners. Then we've got a new demo posted AIP response with vision for RFPs, DDQs. It's a quick 6-minute demo. Essentially, it's a walkthrough on how the solution can help companies gather responses with sign-off when answering questions for requests for proposals or due diligence questions. So the cool thing here is that it's really playing off the existing ontology to get this information much faster and accurately, and it really can accelerate an organization as they keep building up their answer libraries as they answer more and more RFPs and get new and updated information, of course. So I know for a lot of office folks who've ever had to work on answering RFP questions, myself included, it really is a high-stakes situation to get everything as best as possible considering you want to win some business. And this tool really can be applied across many different industries and companies considering how widespread of a use case this actually is. But check it out when you have a chance and let me know your thoughts below, and I'll see you in the next video.